Rates unchanged by the Bank of Canada. Trade uncertainty continues to plague the economy. So instead of offering up their kind of typical baseline forecast for GDP and inflation, the Bank of Canada instead this morning kind of mapped out two ends of the tariff scenario, a tariff on, tariff off outline, if you will. And I can summarize this up with tariff on equals weaker growth, higher inflation. Tariff off equals moderate growth with contained inflation. So not exactly boiling the ocean with any of this. It kind of just affirms what everyone's been kind of saying all along. But in the current tariff scenario, the Bank of Canada expects growth to pick up from negative growth to an anemic 1% for the second half of GDP, with growth grinding its way up to 2% by 2027. So not exactly a breakneck pace there. On the inflation front, they expect it to remain contained under the current scenario around 2%, as kind of the upward and downward pressures would offset each other. Now, the Bank of Canada did hint that if growth continues to falter and inflation is contained, they will look to cut rates. If you refer to what the big bank, rate forecasts have been saying, not a lot has changed on that front. All the big banks still expect 2 rate cuts this year, except for Scotiabank. They expect no cuts this year, with 1 in 2026. So to be determined. We shall see. That's all I've got. Enjoy your summer, and thanks for watching.